Hello guys, good morning. So in this video I will try to speak about something very important about trading, and we say trading is easy, discipline is hard. Now, why trading is easy? Trading, um, it's very easy in the sense that you can uh, buy any stock that you think uh, is good. Okay, so, and in order to trade, you should have what we call a plan. Okay, so let's say you say two, no, one. Okay, we begin with one. Oh, no, we begin with that. This change here. Okay, so when you find the stock that you want to buy, you should have uh, strategy. Now, strategy is just a way to enter and exit a trade. Okay, there are hundreds of strategies online or in books or online, like in YouTube. I have some one strategy that I'm always using, and there are other strategies. It depends on what you are looking for when you want to buy a stock. Some people, they use news, bad news or good news. Some people, they see the earnings date. Some people, they see the breakout. It means a lot of things that you can see. And then when you have a strategy, it means just where you want to enter and when you want to exit. Now, um, that's why trading, anyone can trade. It means you can buy whatever you want, a penny stock, a big stock, um, depending on your money and your skills. Now, the hard the hard thing is discipline. Okay. Now, for discipline, what is it in general? Discipline, although when you look at it, you think it's easy, but it is not. It takes 2 to 5 years to get disciplined. Okay, so why does it take too much time to get disciplined in trading? It's just because when you lose a trade, you don't want to exit. Okay, the trade, you don't want to get out. Why? Because you think you have done a mistake, and you should not do a mistake. You should not do a mistake. Now, this idea that I put between brackets here, this you should not do a mistake, this is in real life. Okay, people, they expect other people, or they expect themselves not to do mistakes. But in trading, losing a trade is not a mistake. It is something that can happen wherever you do. Okay, so this is the problem. Now, when you trade, when you enter a trade, you have only two options. Okay, there is no third one. Two options: either You win or lose. So here we are speaking about one trade. Okay, so for you, when you are trading, don't think a lot about one trade. You should think about a lot of trades, okay, and the outcome. This is the most important thing, the result. I will give you an example. Um, you buy, for example, $1,000 of a stock. Okay, 1,000. Now, for one trade, just an example. Now, in this trade, you lose $100. Okay, so we do the same. Okay, we do the same. It's just to give you a clear example to understand. Okay, you do 3 trades, 1, second, and third, the same amount of money, and you always lose $100, $100. Now, and then the 4th day, you have a very good trade, number 4. Okay, and you don't lose 100. You win $500. Okay, it's like 50%. If for example, you find a stock that it is in strong industry, strong sector, and this stock is a leader, and it's going so fast that you make 50% in some days or some weeks, which is a very, very good trade. Okay, now you see this 100, 100, 100 is 300. You win 500. It means the outcome is 500 minus 300 equals 200 profit. Now, all the professionals, all the people who are trading, they do the same. It means they don't know the future. This is the major thing I want to tell you. No one knows the future except the manipulator. Okay, manipulators, because they manipulate the stock, and most of the time they win because they are very, very strong. Okay, very strong. For example, you buy 100 shares going long. It means you expect the price to go up. Price up. Another guy has 50,000 shares and he short the stock. Okay, he short the stock, so it means it goes down. So what do you think the winner will be, the professional or you? Okay, so this is the thing. Now we go back again. We go back again to this discipline, and we say the discipline is to make a plan and to stick to it. Okay, make a plan and stick to it. Whatever happens. Okay, let's give you an example. Now this is a stock which is called ORN, and let's say you see that the stock is going up and you think that the price will go up here. Now you buy here in this day, you buy with 13.43. Okay, now whenever you buy the stock, you should put what you call a stop loss. How much money you should lose if the trade is a loser. Okay, you should calculate this. And for example, you tell me, I don't know where to put full stop. Put it in a way that it is comfortable for you. For example, this here is, let's say, is 1342 you buy. For example, you say in this stock, I might lose $50. Okay, so I need to, from 13.42, let it say 1292, which is 1292. Okay, 1292. Just an example. So this is with the green, at least this is where you buy with the green line here. This is where you stop. Now the second day, this is the first day, on Tuesday, Tuesday 23rd July. Okay, on the Wednesday 24th July, the stock go down and it hits your stop loss, so you are out. Okay, you are out of the trade. You lose $50. That's it. Okay. If you buy like 100 shares, and the stock was 42, for example, and the price goes to 12.92, so you lose $50 in this trade. Now, suppose that you put down, little bit down. The next day, you didn't get out, you wait. Second day, you didn't go out, but the third you go, the price goes down and you lose the trade. Okay. Now it depends on the stop loss that you put. And then in one day, what you do if you're not disciplined, you do this. You don't do the stop loss. You buy here. Let's see. Let's put a vertical line. You buy here. Okay, this is where you buy. The first day it goes down. You say, okay, I should be mistaken. I'm right. The market is wrong. Okay, and the stock, I'm pretty sure that the stock price will go up. The third day, it goes down. Okay, let's wait. Fourth day, fifth day, sixth, seventh, eighth. Now the eighth, it goes until 11. You use 20% of your money. And some people, they use 20% and they stay. They say, okay, maybe the stock goes up again. But you don't know that sometimes this price of 13, maybe this stock, it will never see 13 again in the whole life of the company. Maybe from 13 it goes to 5 cents. Okay? So this is the problem that you are facing. Since you are not disciplined, you cannot be a professional in the future. You always do the same mistakes. That's why you are a beginner. Okay? When you are like a professional, the professional and you, they do the same trade, but how to act for the trade is different. A professional, when he sees that the stock is going down and there is no chance it goes up, so he gets out and he will wait. Okay, if this candlestick here, it goes up again here and here and here, like you can say the past, like here, for example, you buy here, just an example, you buy here, you put a stop loss here, this is the stop loss. I give you just an example. Now it was 12.55. Stop loss is 12.55, and then at 12.23 you put stop loss at 11.99, and then the third day, this is the first you buy, second, third day, it hits your stop loss, you get out. Now a professional, what does he do? he knows, for example, that this stock is good, so he should wait for it, and then when he see that there is a new development in that stock, he will buy it and he will wait. He will have a very big profit. Okay, so this is good. You get out here and you enter here, here or here or here. You enter because the support is here, so the price is going up and up and up. So whenever you buy, you make profit. Okay, so you see the two different things we have used here, and we have used here. The trade is the same, but how to act to the trade is different. Okay, so we go back again. So we say that trading is easy, anyone can trade. Okay, but in order to be professional, you should be disciplined. If you are not disciplined, you will never see any money. Even if you see some money, you will lose it in another trade. Okay, this is what the beginner do. They can gain money, but they lose it afterward because they are not disciplined and they are playing and they are gambling always, and they stay in the trade that it is like a bad trade. Thank you very much for watching.